appreciate you being here, Pamela. And with that, we're going to be talking about numbers with our next amazing powerhouse speaker Aradhana Aggarwal. Welcome, Aradhana. I am so happy to have you here. And if you will please unmute yourself, we will be able to hear you. I am so excited to have you here today. Welcome.
Thank you so much, Haley, and good morning and good afternoon, everybody, because I'm pretty sure there might be folks who would be joining from different time zones. Appreciate you being here, and thank you, Haley, for giving me the opportunity to be here. It's a privilege to be here, and it's a very good segue. You make money and then you pay taxes, right? But when you pay taxes, it's a pain, and how you can do proper tax planning, how you can be compliant. So I'll be talking little bit of all of that in the next 20 minutes. And just to kind of give you a little bit background about me, my name is Aradhana Aggarwal. I am a CPA, and I am the founder and CEO of Aradhana Aggarwal CPA PLLC. I have been a CPA for last 20 years. I have been featured on TV such as ABC 11, and I have conducted many webinars nationally and internationally. And we specialize in small to mid-sized businesses, their tax filing and tax planning. So with that being said, let's move on to what we should do, what we can do, what kind of entity structures should we have, and then what we can do to be more tax efficient. So just wanted to, I know a lot of women, I'm assuming that all of the women out there, they are in business, since it says entrepreneur, so everybody is an entrepreneur. So I would talk a little bit about the business structure, because we do get a lot of questions about what kind of entity we should incorporate. So there are multiple types of entity, but not every entity is for everyone. So I'll just kind of, go into it a little bit. So one is the sole proprietorship, whether you do it through an LLC or just under your own social security number, where you get taxed on your personal income tax return, and there is no separate entity for that. And then the second version of that, you still incorporate the business as an LLC, but you choose it to be taxed as an S corp. And there are some compliances and all that, and I'll go into it a little bit. And then the third structure is the C corporation, which is a totally separate entity, not LLC, not an S corp. It has to be incorporated as a C corporation. So a little bit, because I can only talk in general, and everybody's situation is going to be very different. So don't take it as a tax advice to your specific situation. So just wanted to kind of put that disclaimer out. And then wanted to talk a little bit about LLC, the advantages and disadvantages, and a lot of things that we see people when they're not compliant when they use LLC. So what happens when you have a small business and you are wearing so many hats? You are the marketing person, you are the operation team. It's pretty much anything and everything that you're doing for your business. So you really never have time to look at the compliance side of things. So when you have an LLC, make sure, or when you have a business, make sure the business transactions are completely separated from your personal transactions. People sometimes don't realize, and then they mix both of those buckets. So their personal expenses, they go into their business expenses. Their business expenses are commingled with their personal expenses. That is not good. If there is an IRS audit and you can't separate those transactions, then the business is going to be in trouble. So always make sure, number one, you have a business bank account, very important. Second, all the business transactions, they should go through your business bank account, whether it's the income, whether it's the expense. And I get a lot of questions when people have LLC and they're like, oh, then how do I take my money out of that LLC? So if it's an LLC, it's all your money. The money is going to be taxed at your individual level. You can, anytime you can take the money out from your business account On the accounting perspective, it would be categorized as business draw, just kind of, throwing a little bit of technical language, but you don't have to worry about it. But my whole point is that you can take that money out anytime. There are absolutely no restrictions on that. So just keep that in mind. That is your money. The only thing you want to make sure, if any personal expenses that you placed on the business bank account, you would categorize as an owner's draw and not as business expenses. So that is very important. Second thing, when you are making too much money on Schedule C, and when we say too much money, obviously, it is very subjective, but just give or take, I would say if you are making more than $60,000 to $70,000 net in income from your business, you should definitely look into the S corp election. And again, I mean, it's not that S corp election is going to be beneficial for everybody, but we can always look into your situation and then see if it would make you more tax efficient if you were to choose the S corp election. So, and there are some compliance issues. The biggest problem with S corp that we see, that it is mandatory for S corps to take a reasonable salary for the owner, and most businesses, they're not aware of it, and then they miss that. And if IRS finds that out, they can go back in time and they can charge the self-employment taxes on that, and obviously it comes with penalty and interest. So always make sure whenever when you try to select the entity structure, you talk to a professional to make sure that you are 100% compliant. The C corporation is a totally different structure, where the C corporation, it gets taxed as a separate entity, not on your individual tax return, but to keep in mind that it gets taxed twice, one at the corporate level and second when you get the dividend. So for most businesses, that may or may not be a good choice, but again, we can always run those numbers and then see what would be the best business structure for you to make sure that you are taking the maximum advantage of the structure in order to gain the tax efficiencies on your personal level and also at the business level. Some other things is they come about deductions. We get a lot of questions about, okay, so what kind of deductions? So let's say if I'm in consulting business, I'm providing services, what kind of deductions we can take? So obviously there are, very common deductions that advertising, contract labor, wages, insurance, interest, professional fees, repair, supplies, travel. But in addition to that, so a lot of small businesses, they don't have a separate place, let's say, to conduct their business in, and they're operating from home. So think of it that you can take deductions for the office use of your home, and you would have to come up with an exclusive space in your home and then calculate the square feet of that versus the square feet of the whole house. And then you can take that prorated deduction for all the expenses that you're paying for the house. So keep that in mind. For the car, same thing. If it's exclusively used for business, you can deduct 100% of the expenses. But let's say if it's a combination of business and personal use, then there are two methods to deduct. One is the mileage rate, and then you actually must keep records of the mileage, or you can take deductions of the actual expenses that are attributable to the business expense. So some other things that you can save money on are the retirement plans. And I see that because people they hear about the SAP IRA contributions and all that, they always think that the SAP IRA is the best choice to save taxes. But again, it may or may not, depending on what your circumstances are, how much income you're making. So there are many different choices in terms of retirement, and you do want to make sure that you explore all of that to make sure that you're getting the maximum benefit of it. Don't always get stuck onto SAP IRA, because it's just human tendency that we hear something and it gets stuck in our mind. And if just because somebody else used SAP IRA, we feel like, oh yeah, this is the best option, but it may or may not be. So just make sure that for your specific situation, you talk to a CPA or to a tax professional to make sure that they can guide you into the right direction and what kind of retirement plan would be best for you. Keeping in mind your tax situation, also your financial goals, short-term and long-term. Also, the on Schedule C, I wanted to point out, and some of you may already know, that you pay an additional 15.3% self-employment taxes on whatever income you make. So let's say, sorry about that. So let's say hypothetically, sorry.
Hey there, I understand. We are going to edit this video once we are done and give you just a chance to breathe.
Yeah.
You good?
I'm good. Yeah, I think I can talk.
Okay, cool. Awesome.
Sorry. So anytime you have a Schedule C income, you do want to remember that you are paying additional 15.3% in self-employment taxes on the top of your regular income tax. So let's say hypothetically you are in 20% tax bracket. So you are paying 20% plus you are paying that 15.3%. So always make sure that you talk to someone, and we can definitely help you for tax planning, that you don't end up paying a whole lot in that self-employment tax, which is kind of a flat 15.3%. So always some other areas of tax deductions, and you may have already heard about those electric vehicles like Tesla and all that. Solar project tax credit, which has been extended for another 10 years, and it has been raised from 26% credit to 30% credit. But make sure, like, there are some requirements, especially for electric vehicle. If anything you buy after August 16th 2022, all the parts, the final assembly, it has to take place in US. So just make sure that when you are talking to the dealers and all that, you make sure that you talk about it, because if it's not assembled in the US, you will lose the deductions. The second part is, if you are making, let's say, like significant amount, you start losing the credits that you get, they start phasing out. So you do want to make sure that you plan ahead of time to make sure that you can take advantage of those credits and you can keep your tax brackets at the lowest. Obviously, you will have to pay some taxes, but we can definitely help you to make sure that you are not, we can do your tax planning proactively. Also, you should be paying quarterly taxes, quarterly estimated taxes. That's what we see a lot, that folks don't realize that they are supposed to be paying quarterly taxes if they're in business, because on your W-2 income, the employer is deducting those taxes and submitting it to the IRS and to the state. But when you are a business owner, then it's the responsibility is on you to make sure that you are paying quarterly taxes. Few more things that we have seen that people sometimes, and as Pamela was talking, good points about properties, buying, selling, making money, flipping, and all that. What we have seen on the tax side, is people do all these transactions, but because they're not aware of the tax implications, they end up paying a whole lot taxes. So I would always recommend that before you make any big decision, whether it be selling your investment property, buying anything big, selling if you have any stocks, if you have cryptocurrency, anything. And just to give you an example, I had a client. So when crypto prices, that kind of, they went crazy, he made about $7 million on selling cryptocurrency. And after he sold, then he realized what the tax implications were going to be. He reached out to us. So make sure when you do that, reach out to us before you actually do it, because we can implement so many tax strategies to make sure that you don't end up paying a whole lot of taxes. So always it's very important to work proactively. So anytime, so the I would say the thumb rule is that, rule of thumb is that anytime you feel like, oh, now I'm thinking about taking this business decision, whether it's buying the house, is buying the second primary house, or is buying the investment property, selling the investment property, getting married, donating a huge chunk of money, anything, any big thing you do, you just always keep that in the back of the mind that I need to talk to a tax person, because you don't want those surprises when you file taxes. We go through these things all the time, and I cannot tell you, how shocking the numbers can be when you don't, when you are not proactive in tax planning. So always make sure that any big decision you take, talk to a tax advisor. And as I said, that we have a special niche in tax planning for small to mid-sized businesses and high income net worth clients, and also anything big that is going on in your life. We can always consult on those, and then kind of give you the right path, so that you don't end up in a situation where you get surprised when you see the tax bill. Other thing that I wanted to, sometimes, and people, a lot of you probably would know the standard deductions and itemized deductions and the difference in that. I would not go into the technical side of it, but just to kind of tell you to take advantage of it, club those deductions. So instead of doing it every year, so let's say you donate, right? And you have a goal that I am going to donate whatever percentage of my income. Try to club that in maybe an alternate year, so that your deductions are so high so that they exceed the standard deductions, and you can take advantage of it. If you have some big medical expenses coming in, try to plan it out so that you can take advantages of the tax deductions on that. So always make sure that, because we just like, anytime we have to donate, or any expenses, any real estate taxes, if you can possibly try to pay for 2 years in one lump sum amount. So that way, if the lender allows for it, or if your county allows for it, so that way you can take benefit of that deduction also in your tax return. Another thing, which I hope that it never happens, but if you ever get audited, don't worry about it, because I mean, whenever we get a letter from IRS, it's always frightening. And for anybody, even for us, when we see it, it's like, oh my God, what do they need now? So, but anytime that happens, don't worry about it, because it's not that IRS is, there are live representatives and they are looking at your return. So they have a system called DIF, is discriminant information function. And basically what it does is measuring the risk of your return where the income is underreported, and is comparing your return to other returns in your industry, is comparing your return to your prior returns. And they have their own benchmarks. Obviously they have their own algorithms, and they don't declare it, they're not public, but given our experience for so many years, we can see what that consistency should be and all that. So if you ever get anything, we have 100% success rate in IRS representations. We have dealt with the cases where IRS is asking even few $1 million in past taxes and penalties and all that, and we were able to bring that back to zero. So anytime you get that letter from IRS, don't you ever worry. We will take a look. We are happy to take a look to see what can be done on that. But anytime you get the letter is not always a bad thing, because if there is a problem, there is always a solution to that. And some of the expenses, for example, business meal expenses, so you may or may not know, but it was 100% allowable until 2022. For 21 and 22, because of the COVID, and IRS was trying to encourage the restaurant businesses because they were shut down. So during that time, if you ordered food from a restaurant, it was 100% deductible. Going forward from 2023 and onwards, it's going to be only 50% deductible. So sometimes when we eat out with our business alliances or anybody, we think that it's 100% deductible. Keep in mind that it's only going to be 50% deductible. So those expenses, and also, I can go on and on, but what kind of meals are deductible and all that, that's another thing. So just because you need lunch during your business hours, that's not going to be deductible. So you do want to make sure that it's because, you have a client meeting or the clients are coming, or it's for the employees and all that. For your regular meals expenses and all that, those are not deductible. One more question that I would kind of focus on is contractor versus employee. People think that is their choice and they can hire anybody as a contractor or as an employee, which is not correct, because the rules are determined by IRS, and there are certain criteria that you would have to, and there are certain 3 tasks that you would have to go through to make sure whether that employee should be, whether that person, the potential hire, should be an employee, or that person should be a contractor. So it really depends on the type of work they do, the hours they spend, how much control you have on those hours and the work as an employer, what kind of relationship you have. So there are certain criteria. So don't when people think, because we get a lot of questions, oh, I'm just going to hire this person as 1099. It's not your choice. It should not be your choice. You have to meet those tests, because IRS doesn't like when you hire people as a contractor, because they want them to pay taxes upfront as for FICA taxes. And that's where IRS, if they come back and you hire somebody as a contractor, but they should have been classified as an employee, so they will come back, then they will classify, they'll go back to the date whenever you hired them. You will be paying penalty, you'll be paying taxes, you'll be paying interest. So always make sure that you are compliant on that side. Again, business expenses versus personal expenses. Some expenses that can be a business expenses for one industry may not be a business expenses for another. For example, if there are some beauty items, or if you have to wear certain clothes or anything, for example, let's say in medical profession, if you have to wear those gowns, doctors gowns and all that, they are deductible, but because that is required for that profession. But if I say, oh, just because I'm a CPA and I need to dress up to see my clients and all that, and I would like to deduct those expensive clothes, that's not deductible. But by the same token, if I am in entertainment industry and it's important for me to have those nice clothes because I'm going for modeling or something, and that's the reason that I'm buying those clothes for, they may be deductible. So always, we don't want you to miss any deductions. So anytime you have any questions or anything, please feel free to reach out to me. And I'm on Facebook, obviously, and I can drop the link to our website. And we have a 15-minute complimentary meeting also, so you can always schedule an appointment. And any questions you have, I'll be very happy to answer those questions. Haley, do you want me to take any questions, or do you want me to talk a little bit more about some other things I can talk about?
Just go ahead and tell people how to book a call with you and how to get in touch with you.
Sure. So there is a website, www.aradhanaagarwalcpa.com. So you can get in touch through the website. We are on Facebook. Even if you Google search Aradhana Aggarwal CPA, it should give you the link. And we are also on Instagram. Again, and on Facebook, and also on our website, there should be a link for our Calendly. So you should be able to book a complimentary 15-minute appointment anytime on that. So I would highly encourage, anytime you have any questions, anytime you need tax planning, we do tax filings too. So this is kind of the busy season for us. But if any of you do need tax filing, definitely, this is a service that we provide in addition to tax planning. So it can be just either tax planning, it can be tax filing, it can be both. And we also offer the accounting and bookkeeping service, so that way you will have access to us throughout the year, and we'll work with you, and as you grow we'll kind of do hand holding with you to make sure that we are, as you're growing, we are keeping you compliant, and we are at the same time we are making you tax efficient.
Awesome. Perfect. Thank you so much for doing this talk today. I know that there are a lot of people out there searching for a good and, competent CPA. And, it is a need that almost every single business owner has. So y'all check out Aradhana. She is amazing. And, y'all do a great job here locally. So love y'all. Thank you.
Thank you.
Let's give Aradhana a round of applause, and let's say thank you to all of our speakers who took time out of their day-to-day to speak here on today's WEN Talk. I really appreciate y'all. I appreciate those of you who have been watching today and who have been commenting. We really appreciate you. I really appreciate you. I hope that you'll check us out on YouTube under Women's Entrepreneur Network and subscribe, and you'll get to see all of the replays on our YouTube channel as well. So thank you so much, Aradhana. I appreciate you. I appreciate everybody who's been a speaker here today. Thank you guys. Bye-bye.
Thank you.